All right, what's up guys? Another video journal on this range. This range has been going on for about a month now, and we are, as you can see, we're kind of distributing at the bottom of this range right now. And that's kind of what I want to talk about. I want to talk about this right up here, as well as what is going on right here. This is how I currently have it marked off. So we had a UTAD distribution up here, followed by a markdown mode, which was this price action right here. We distributed here for about 2 days. And then you can see the UTAD that happened right here, which was the start of the downtrend, the markdown, which I call a avalanche here. And an avalanche to me is an extreme form of downward price action where each low that is set is taken out sequentially by the next low. So you can see a low was set here, which was taken out by this move. And once this low was set, it was taken out by this move here, which was taken out by this move right here. And it's a very bearish sort of pattern that I've noticed, and I believe this is what's going to continue here, and I'm fully expecting this low to be taken out, right? But of course you can have moments where price will actually revert and clear out some of the leverage that's coming up here, and we'll talk about that some more. Okay, first let's start with this UTAD distribution. So you can see this range as something like this, where this is your buying climax and down here is your automatic reaction. As you can see, as we came up here, we did have another distribution period that took place here above the midpoint. I see this as Wyckoff as well, where you have your buying climax right there, automatic reaction right there, structure test, sign of weakness, and of course you have your UTAD event here, which was the start of the local markdown. And then over here, you can see we have another redistribution pattern playing out. Selling climax, automatic rally, structure test, sign of weakness. And then of course you have your UTAD, which was the start of the downtrend, which caused this huge sell-off. I shouldn't say it caused it, but it was definitely the start of the sell-off. So it is interesting to me in the grand scheme of this range, how we bounced up, we held above the midpoint of the range, but it looks like we had some distribution here before we came down, you know, found a local bottom right here. But even here we had distribution. We did not have enough to even come back up and retest the midpoint of the structure. Okay, looking at the CVDs of this range, it does look clearly like futures is selling, okay, while spot is going flat and slightly buying up here. And it's interesting how into this move you can see both spot and futures have some strength going into it, but as soon as that buying climax is set, the CVDs really level off and they just kind of go flat, right? I want to understand who was buying when spot was buying a little bit, and it does look like it was Coinbase and OKX that were primarily buying. Looks like Binance was pretty much flat for the most part. So I'm curious what that was. Okay, if I don't know if that was retail possibly hopping on or what was going on there. But in regards to futures, you can clearly see that futures is actively selling during this regime. Okay, so we had this UTAD event, right? We have a huge sell-off, and then we enter into this distribution phase for about 2 days. So you have your selling climax right here, followed by your automatic reaction. You have a structure test, which coincides with the middle of the range, a test of the middle of the range. You have your UTAD event right here, and the UTAD, of course, is the start of the markdown, the avalanche. Okay, and I know typically in Wyckoff terminology, structure tests are supposed to happen at the bottom of the range, but in my trading style, I think it's perfectly fine to have structure tests at the middle of the range, especially when price is not even down here. If price is holding up at premium within the range, then it makes sense to me that you can have structure tests at the middle test of the range. Okay, so and this range has been pretty boring, right? There's not very much volatility, not really many trades to be made. I guess you could have traded the structure test and a retest on the structure to the top of the range if you wanted to, because this move in of itself was about 0.82%. Just looking at the CVDs, futures is selling, okay, and spot is selling. So it makes sense why you have such bearish price action here, and why the UTAD here doesn't even go that far, right? It's you have heavy selling pressure from both spot and both futures, and it doesn't look like there's any weird shit going on in the futures market where they're stepping up the market. Okay, next we have the avalanche structure, which is an extreme form of bearish price action, right? Because each of these lows that are set are taken out sequentially in order, right? And I personally suspect that this price action to continue at least until we get down to about 29,000. Okay, I think once we actually make a move down to here is when we'll have a regime change in price action. But what's interesting to me is this avalanche, of course, is started by the UTAD, which sets the whole thing into motion. And with these avalanches, not only do you have lower lows being set, but you also have lower highs being set, right? So obviously this is not financial advice because I'm not a financial advisor, and honestly this is just my personal trading journal. But one thing I want to make note of is how you could potentially trade this, right? If you understand that, hey, for the next day or two, because this avalanche lasted for, let's see, it's been lasting for about 3 days. If you can speculate that for the next 1 to 3 days, we're going to have an avalanche and we're going to have this downward sort of price action, then it would make sense to take shorts here, and you would have very clear invalidations, you know, your stop loss above the local high, right? And then you can take positions, you know, when you come back up here to mitigate some of this volume right here, like mitigate this right here. This would have been a nice short with your stop loss right above that, right? When you come back up here, you know, and then you can target the local lows, you know, and then once you come back up here, like it did right here, you know, you can take your entry in right here, stop loss above the local high, right? And then target the local lows. So again, that's not financial advice. I'm just kind of talking out loud. So here's how I view avalanches from the paradigm of Wyckoff. So as you can see, the UTAD is what starts the avalanche, and then it's followed by a selling climax, okay? Followed by last points of supplies all the way down, and selling climaxes all the way down, okay? Notice over here, I have this labeled as a UTAD instead of a last point of supply because it's clear to me in this range right here, there was a bit of accumulation that was going on right here. And then you broke out of that and you actually cleared all these highs right here, right? So to me, this is almost like an upthrust distribution, right? In the grand scheme of things, followed by another side selling climax right here, selling climax, last point of supply, last point of supply. So following this sort of pattern, it makes sense to me that when we come up here, this would follow the same pattern of last point of supply right here, selling climax, last point of supply, right? Of course, that's complete speculation on my end, but until we actually start breaking above these highs right here, would I consider something else to be going on that I'm not understanding, right? But kind of my viewpoint right now is there's no reason for this to stop until we actually set new lows, or we have a period of consolidation sideways, right? Something like this, okay? If we sit for a couple days where the price is just kind of trading sideways, that tells me that there's a new price action regime at hand. But right now, I'm just going to follow the trend right now, which is this avalanching sort of structure. So in my head, there's kind of two types of avalanches. There's this sort of avalanche where the price action is pretty much like, okay, selling climax, right? Last point of supply, selling climax, come back up, last point of supply, selling climax, right? So it's very bearish price action. But then you can have another type of avalanche where it's like you have a selling climax, right? And then you have a period of redistribution where price makes a UTAD right there, right? And then you have another sell-off and a selling climax right there. And then you have the same thing where price kind of trades sideways, UTAD, right? And then selling climax. And then you get that consecutively where you just have these periods of redistribution after redistribution. I mean, you can even see it within the range over here. Let's zoom into this. Okay, you can see you have your selling climax right here, and then your automatic reaction right there, which demarcates the range. Okay, and then you have your UTAD or UT event right there. Then you have another redistribution range right here, selling climax right here, automatic reaction. You pop up here, right, for a UTAD event, and which of course leads to another markdown of some sort. So here's another example of this sort of price action in action, but on a larger time frame. So this entire thing to me can be seen as an avalanche. So you can see the distribution structure right here, and of course right here you have the UTAD, which starts the downtrend. Right here, you have another redistribution event where you have your selling climax right here, your automatic reaction right here. And notice how you have your UTs, your UTADs right there, which also serve as last points of supplies. And of course, you got your markdown right here, which is littered with many little redistribution patterns that you can find throughout here, right? So you got selling climax right here, automatic rally, selling climax, automatic rally, selling climax, automatic rally. You have your UTAD right there, markdown, and then finally we hit support right here. We hit support right here with your selling climax, and then you have just a much larger Wyckoff structure that plays out here over a longer time frame. Okay, this is a 2-day structure, right? And this coincides in the much larger structure at hand. Okay, because you got your selling climax right there, you have your automatic reaction right here, you have some UTADs right here, you have some upthrusts right here, but then you have your UTAD event right here, right? And this, of course, is again the start of another downtrend, which creates this price action right here. But I'm not sure if you guys can see this, but you can see the redistribution structures just littered all throughout this price regime until you find a bottom right here where you get accumulation. Okay, you have a nice little spring, and then you have a completely different price regime here where we just trade sideways, you know? Okay, so that's kind of my thinking in terms of that this bearish avalanching price structure, and using Wyckoff to kind of annotate that, what that looks like. And that's kind of what I think. That's my bias for this sort of price action. The fact that we're avalanching at the bottom of the structure is very bearish to me, because typically you want to see strength. You want to see accumulation at the bottoms of structures, and the fact that we're having this bearish price action at the bottom of the structure tells me that we're in for some more downside. Now, that doesn't mean that we can't have some short-term upside. In my opinion, we can have short squeezes, but the thing is, if we do have a short squeeze and we come back up here, I consider this to be just another redistribution, which will send us down to the lows. Okay, and I think that this would be basically a last point of supply before you come down, right? So that's one scenario I'm looking for. If we do catch a bid right here and we squeeze up, I'd be looking to probably look for a short at the top here unless we start seeing a bid in the futures and spot markets. But right now, I have not been seeing a bid in the futures or spot markets. As you can see here, it's just been down only pretty much for both futures and spot. Another scenario I'm looking for is to kind of just continue this avalanching, right? Until maybe we come down to the bottom here, maybe redistribute, have a UTAD, and then we take a plunge, you know, taking out this low and then consolidate right here. And this, if we get down to here, that's when I would be also looking for longs to squeeze out all of this leverage in the system and all these stops, to run all those stops for another potential last point of supply right here, to continue making lower lows in the grand scheme of the market, right? Lower and lower lows. Now that can also have changed if let's just, because it's all like if this then this, right? If a certain scenario happens and we do make it here, I'll be closely watching the market to see if we're actually getting organic bidding down here. Like if a spot is bidding heavily and futures bidding heavily, then if we come down here, it would make much more sense that we would actually break out of here, right? And it makes much more sense that we're bullish, right? Because the overall larger time frame is bullish, right? So that's kind of how I view the market, right? But if we come down to this range right here and I'm seeing spot is selling and futures is bidding the market up, okay, that tells me that there's not really organic demand here, and futures is probably going to squeeze the market up, bring us to a place where people will naively be bullish, thinking that this is an authentic organic move up, when in reality it's just a short squeeze and it should be faded, you know, to the downside until organic demand steps in. And I think like if we don't hold here, then I'd be looking for us to hold specifically like right here in this range right here, because if we take out this low right here, if we take out this low, it gives credit to the possibility that this was the top of the summer. Because in that case, if we take out this low, then I'd be looking to probably potentially run this low in the long term, in the long time frame of things, right? Because if we start like distributing, kind of stepping down here, you know, we have a squeeze up and then we like run this low, you know, to me it makes a lot more sense that this low is going to get taken out, and we'll probably have to see how the market reacts once we get into this area right here, for almost like a double bottom type scenario, right? Where if we get down here, right, just see how the market reacts if we start accumulating and we pop up out of here. Okay, but anyways, that's the end of today's video. I've been talking for quite a long time, but I hope you guys enjoyed this video. Not financial advice. This is just my personal trading journal, but if you were able to find value out of it, then I appreciate it. Okay, see you guys later. Peace out.